today we are going to cover this coin Humanity. It's currently down 9% in the last 24 hours, but it is up about 80% in the last week, 216% in the last 2 weeks. So we're going to talk about this. Remember, I'm not a financial advisor, none of this financial advice. And shout out to the member of the channel that recommended this video. Guys, if you want me to go over special requests for you guys, become a member of the channel, and I'll do a full breakdown on any project as long as it's not a low cap scam coin. All right, so we're gonna go and cover this project, and actually the same member requested that I go over Humanity about a month ago, a little over a month ago. And I remember during that video I mentioned that it was about to crash, and that's exactly what it did. I did a little projection here because it was 50% drop before, and then another 50% drop, and then we also had a bearish signal, which was a descending triangle, which also was confirmation for me that it was about to drop. So I mentioned that, and then it ended up doing just that and dumped immediately after that. So yeah, that's pretty interesting. But let's talk about what could happen here. So this Humanity has a huge some huge whales doing some big buys and sells. Like, those are huge candlesticks right there. Those candlesticks should not exist on the daily chart. So there's definitely some whales doing some stuff inside of this project. But what I'm seeing currently, we're just going to start from the daily chart and go down. We have the %R trend exhaustion here. The short-term trend has broken far past the long-term. And now both trends are coming down now. So the short-term trend and the long-term trend, they don't have to come all the way down. And this is the thing, I can't tell you whether or not it's going to go up or down, because I don't know. No one knows. But what I can say is, with both of these trends on the %R trend exhaustion, if the long-term trend does something like this, then you're pretty much screwed, because you don't know what's going to happen, and it's just going to do whatever it does. And this happens sometimes. So you would have to make that decision yourself. But if it does what it usually does, and this is what I always talk about, what it usually does, the short-term trend comes and dumps, long-term trend does too, price completely gets demolished, right? And what that would look like on the charts would pretty much be us going back down to these lower levels here. There's resistance right here, so that would be a good support. Let me just show you that. Boom, right there. That would be a good support down here. Boom, 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 boom for resistance. And so yeah, if we did pull back, I would be targeting 8 cents. Obviously we have 11 cents there, but I would definitely be looking towards 8 cents, because we already kind of hit lower than that, 4 cents. So it could go even lower. And the MACD is showing lightly green shaded candlesticks, indicating that selling's coming in. But it did it here, and then it just kept going, kept pumping. So there's always mixed signals there. And then we have the 4-hour chart, and this is what I mean by mixed signals. We have the 4-hour chart, both the short-term and the long-term trend. Now, if the short-term trend continues down and the long-term trend stays sideways, then it's bullish, because then it could be perceived as bullish, because then the short-term trend could do this. But then as soon as it comes up, they can both come down. So that is a red flag. But it is kind of curving downwards right now, so I would expect this to drop even more. Personally, I would be selling this right now, personally, and then you can see some selling pressure building up there on the 4-hour chart. But yeah, I would definitely be cutting the losses personally, because I remember the member, shout out to you again, he mentioned that as you can see down here, he mentioned that he bought at the top. So if you bought at the top, you bought like all the way in here in this area. Pretty much when you requested the video, you probably ended up buying this area, and then he ended up requesting that first video around this area. So he probably bought here, but then requested the video around here. You should have sold on that rebound right here. Should have sold right there. But it's not too late, because we did have a little bit of a recovery, so you can get some of your money back. But look, I'll tell you, this thing could take off at any time, and it could dump at any time. So, you know, it's really it's really risky. Like if you want to sell it, you run the risk of this continuing upwards. If you want to hold, then you run the risk of it continuing to dump down, and then you really don't get anything back. So there's a huge risk on both sides. Personally, I would sell because the percent R trend exhaustion does look like it's coming down on both the short and the long-term trend. But what I'm noticing is the long-term trend, the blue line, is moving down at a much slower pace. And what this is telling me is that eventually, if the short-term trend gets all the way down here and the long-term trend is like here, then what's going to happen is the short-term trend is going to increase and come up to the long-term trend. That's going to send the price up, but the whole time as it's going down, the price is dropping. And the problem here is if this crosses and intersects, it could continue downwards, and it probably will continue downwards. So you're probably better off getting out now. But again, like I said, even on, this is the 2-hour chart now. Look at how the long-term trend is just a little sideways, and the short-term trend is kind of going sideways too. So it's really undecided. And personally, when I'm trading, I only make decisions when I'm overbought on the percent R trend exhaustion or when I'm oversold. So like if I'm oversold, I'm doing puts. If I'm doing stock options, if we're overbought, I mean, I'm doing puts. If we're oversold, I'm doing calls. But looking at humanity, it's a really hard choice to decide whether or not you want to get in or out. And look at this. This is absolutely crazy. I never see this on the percent R trend exhaustion, but here we go. And it's, again, a mixed signal. Doesn't really tell us anything. It tells us that it could go up or down. And then I have some dumbasses inside the comments that'll be like, oh, he just said it's going to go up or down. Because, you know, some people have never done technical analysis in their life. But yeah, obviously it can go up or down. But yeah, like I was saying though, this can get risky because, you know, you don't know if it's going to dump or not. Me personally, I would be out of this thing. I would be out. Probably would have been best to get out at the 21 cent range, but you didn't have time to do that. But it is coming down a little bit further here, and I think it is going to come down more, at the very least, to 11 cents. But it's just these short-term pumps inside the market. When you miss the initial pump, it's over. And this is in my eyes. In my eyes, if I missed this initial pump, it's done. But you were holding the whole time, so you're still down. But it's really hard. Like I can't tell you whether or not you should buy or sell. So you would have to make that decision yourself. But honestly, I would sell this because it's not looking too good. It's not looking too good. But hey, anything's possible. Anything could take off. You could sell it today and it'll take off tomorrow, or you could hold it and then it'll dump tomorrow, right? It always seems like it's always the opposite of what you do. Like if you buy, it always seems like, oh, it dumps. If you sell, oh, it always seems like it's going up. So, you know, it's part of trading, and part of trading is psychology and risk management. And me personally, proper risk management would have probably gotten out right as it broke the bearish pattern, right? So right as it broke this bearish pattern, and this is just for future reference, you know, when you're trading in the future, because risk management, you should have had your stop loss right below here at this support here. So as soon as it came down below this this descending triangle and hit that support there, you should have sold right there. And since you actually like this project and you like the AI capabilities of it and everything, you could have waited for it to hit this support here, which is a good support. Whenever I see it hit this red Fibonacci, it's usually a good signal for a reversal, and it did. So you could have bought again down here and sold probably at this first resistance. But, you know, just for future reference, risk management is the best way to go about things. So that's why I showed you the descending triangle. So if it broke down below it, which it more than likely was going to because it's a bearish pattern, then you could have sold here. That's kind of why I showed you it. But shout out to the members. Shout out to you for recommending this. But yeah, personally, I would probably get out. But there's no telling if this thing's going to recover and then start taking off again. Because look, if you come back here It did exactly that, and you would have been screwed had you sold here, because look at what it did before. This is what I'm talking about. Short-term trend bottoms out, long-term trend kind of goes sideways, continues upwards, down, continues to stay overbought for a long time. We actually are just now became overbought again after all of that. So if this is to happen again, technically speaking, then there's a possibility that it could pump. There's a possibility, but it doesn't mean that it necessarily would, right? And what we seen last time, it was around the same area, actually, right near the same area. It dropped all the way down to the support by 11 cents, but it went down to 10. So the support at 11 cents could be that area where you're looking at as a not take a profit, but this could be the area for your stop loss. So if you see it coming down and then it breaks 11 cents and it continues, then you know it's about to hit 8 cents if it continues down. So a good stop loss would be at 11 cents right here. So that's what I would say there, because if you look at what happened back here, like if you would have missed all of this if you would have thought that the percent R trend exhaustion was going to continue to trend it downwards. You would have missed it all. But if it was a false signal, I'm pretty sure there was something back here that did that. Yeah, if it was like this where it went down and then it did like a bull trap and trapped the bulls and continued down, then you'd be screwed if it did that. So it's a very, very hard choice to make. But yeah, like I said, if it goes below 11 cents, I would sell. Personally, I would sell right here and make that money back elsewhere. But it's up to you. You could wait till it hits 11 cents, and then if it goes down, you could sell like as it breaks this. But if it does like a reversal, then you'd be good. But anyways, this is all I got. Hit the like button, subscribe, everybody. Remember, I'm not a financial advisor. None of this is financial advice. But anyways, I'll be back with another video.